Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because I truly can't believe the backdrop that's shaping up for Bitcoin now that we've consolidated for 6 months around our previous all-time high as the Federal Reserve gets ready to embark on its next rate cut and easing cycle. And while the US federal government is running $1.9 trillion deficits, which is 24% and almost $400 billion higher than what we saw in the fiscal year of 2023 by this point. And as if the liquidity backdrop wasn't enough, we now have way more regulatory clarity now that 2 of the 3 largest asset managers in the world offer and market Bitcoin ETFs to their client. And I know everybody hates ETFs now because the inflows were good in the beginning and they've slowed down and now everybody thinks Wall Street ruined everything. But we just have to keep in mind that these things do take time. But when we look at the liquidity that's on its way via easing and all this debt issuance, combined with the fact that everybody has easier access to Bitcoin than ever, it's really hard to not be incredibly optimistic over the next few months. And unfortunately, I'm seeing so many people giving up and arguing over the short term and exactly where we're going to bottom and exactly what month we're going to bottom, or they're caught up in the election and who's going to win and what's that going to mean for Bitcoin, or perhaps the most painful of all, the recession fears and the constant discussion about how the Fed is only cutting rates because we're entering recession. And look at 2001 and look at 2008. As soon as the Fed started cutting rates, it meant that everything was all over. But in this video, I'm going to talk about why that is not the case and why the Fed is not cutting rates because of recession, but because the interest expense of the federal government is literally ballooning out of control as they try to roll over their debt at these higher interest rates. This is something I've never really covered on the channel because I didn't see the need to talk about it while the Fed was keeping rates elevated and tightening, because that likely meant that global liquidity would keep going down. But with Bitcoin's main narrative being a currency debasement hedge and Bitcoin having a fixed supply, if we see the amount of money in the global economy increase, that's likely going to have a very positive effect on Bitcoin. And if we look at what happened in 2018 when global liquidity got tightened quite aggressively, Bitcoin did terribly. And then 2019 going into 2020 was relatively flat. So Bitcoin was relatively flat as well. And then we saw the explosion of liquidity in 2020 and 2021. And what do you know, Bitcoin exploded as well. And then we saw the cycle repeat in 2022. A lot of liquidity pulled out of the system via the Fed's tightening and hiking and central banks hiking rates around the world to fight inflation. And liquidity has been relatively flat and down over the past year or so, but Bitcoin was able to go a lot higher than it should have because of all of the excitement surrounding the ETF launch. But now that we're seeing global liquidity getting ready to bottom out here, and the fact that it's likely going to increase over the next few months as the Fed goes back to cutting rates and easing, it's very hard for me not to be bullish over the next few months. And now I'm not sure if the Fed is going to cut by 25 basis points or 50, but that doesn't matter to me as much. The direction is what's a lot more important, because they may wait until after the election to start cutting rates more aggressively so they don't look as political, but we're going to find out Wednesday of this week. But the real elephant in the room that most investors aren't focusing on is what's happening with this federal government deficit and how we're seeing an even bigger deficit than last year, even though the economy isn't in recession yet. And we see the interest expense absolutely ballooning because they're having to roll over this US debt at higher interest rates. We're now well above national defense, we're also above health, and we're slowly creeping up on Medicare. And if we look at the history of the interest expense owed by the federal government, you can see that it absolutely skyrocketed since Q1 of 2022 when they started issuing debt more aggressively and having to do so at higher interest rates, thanks to the Fed having to fight inflation and keeping their Fed funds rate higher than the market has been used to over the past 10 years or so. And we've been talking about this all year. Our forecast for 2024's deficit was about 2 trillion. And so far, it looks like we might even overshoot that because there's 2 months to go and we're already at 1.9. But when you look at the history of federal deficits and how usually they're used to pull the economy out of recession, the fact that the federal government has been doing larger and larger deficits to keep us out of recession while the Fed fights inflation is why I've remained bullish Bitcoin and other risk assets on larger timeframes. Because we know that the debt has to get monetized eventually. This is the relationship between the US government debt and the US M2 money supply over the past 70 years or so. And I zoomed in a little bit on it here so it's easier to see. Notice how the national debt has been absolutely skyrocketing thanks to those interest expenses going up recently, and how the M2 money supply has been down and is slowly starting to work its way back up. And the reason why the M2 money supply has been lagging is because of the quantitative tightening that the Fed has been doing since the beginning of 2022 by selling the assets on their balance sheet. And just as a quick reminder, quantitative easing is when the Fed buys financial assets, usually government bonds, and adds them to their balance sheet, which increases the money supply. And quantitative tightening is the exact opposite, when the Fed reduces its balance sheet and sells its assets and decreases the money supply in the economy. And this is why we see the relationship we always talk about this channel between the US national debt and the S&P 500, because eventually that debt gets monetized and increases the money supply. And because risk assets are priced in the dollar, as the dollar gets devalued over time, that sends the prices of risk assets higher. And that's why we see this very clear correlation between Bitcoin, the S&P 500, and other risk assets with global liquidity. So the main thing I'll be paying attention to in this upcoming Fed meeting is, aside from just how big the rate cut is, we're going to find out if the Fed is officially going to go back to easing after quantitative tightening for the past 2 years. Now, I know as soon as I bring up rate cuts, a lot of people start talking about this chart, and we always see this chart all over Twitter and YouTube. And yes, in 2008 and in 2001, the Fed waited way too long to cut interest rates. But back then, the Fed did not do quantitative easing or have any other measures to keep the economy out of recession. And we did not have the federal government running these huge deficits to keep the economy out of recession as well. And we see this very clearly in the data. If we look at the unemployment rate, yes, it's been going up recently, but it's still well below the recession start average. And if we look a little bit closer at the continuing jobless claims, which tends to be a good proxy for the number of unemployed people, we're still well below our recession start average of 2.65 million, all the way down at 1.85 million. And if we look at our proxy for layoffs, initial jobless claims, we are about 130,000 jobs below the recession start average there as well. So I think the labor market is a lot stronger than people think. And I think that unemployment rate number is a bit misleading because maybe people are joining the workforce, or who knows what else it could be. I mean, it is a government data point after all. And as for inflation, which is really the reason all of this happened and why the Fed had to hike and do QT so aggressively, yes, core PCE still isn't back on their 2% target, but we know that these government metrics for inflation lag a ton. And if we look at our leading indicator that updates daily, Trueflation has the US inflation rate at 1.1% year over year. And finally, if we look at growth, we know that 2 negative quarters in a row of real GDP is a recession. We're well above 2% right now and have been for the past few quarters. And if we look forward at the estimate via the Atlanta Fed, they're still expecting us to stay at about 2.5%. And all of this ties nicely to what we've been saying about the US dollar index as well. We knew that it would hold support at this range low for a while, but we are expecting it to break through eventually, because if the Fed is going to go back to easing and back to devaluing the dollar against other currencies, that's what sends the US dollar index lower, which we know is incredibly bullish for Bitcoin, because a weak dollar and a devaluing dollar are the main narratives for Bitcoin. And that's what has sent us into price discovery in the past, and also caused our large alt seasons as well in 2017 and 2021. But this time we have the backdrop of regulatory clarity for Bitcoin with the BlackRock ETF and the Fidelity ETF as well. So I think altcoins are still a little bit uncertain, but now that we have these spot ETFs from these big issuers and they're making so much money off the AUM they have of these ETFs, it's really hard for me to not be optimistic Bitcoin in the medium term. And I know many investors hate the ETFs now because the inflows were really good at the beginning and everybody was celebrating and we made a new all-time high before the halving. But ever since they slowed down and have been quite sideways over the past 2 months or so, many people are saying Wall Street ruined everything and we should have never had the ETFs to begin with. But I don't believe that to be the case whatsoever, because once the actual drivers for Bitcoin's price, like currency devaluation and global liquidity, start to pick up, we're perfectly set up regulatory clarity wise, and everybody will have access to Bitcoin in their brokerages where they have their other assets like stocks and bonds, and they'll be able to add that Bitcoin allocation very easily without having to worry about any kind of regulatory uncertainty because it's offered by these large issuers. So for those reasons, I'm so comfortable with my Bitcoin spot holdings. There's always a lot of uncertainty in the short term. We still haven't made it through September, so anything can happen, but we're getting very close to the finish line and we're almost done with this summer chop seasonality. And if we look at the historic returns in Q4, they tend to be pretty good, which is in line with what we tend to see from the S&P 500 in Q4. And the first thing we're going to look for is a reclaim of that 61.5K range low that we've been below for the past 2 weeks. Reclaiming that would be a nice short-term bullish catalyst, but with the election drama going on until November, even though I'm incredibly optimistic starting at about mid-November when all of that hassle will be behind us because of what I'm seeing with liquidity, we still know that anything can happen with this election as we get close to the November deadline, because we tend to see volatility in markets pick up, especially in election years where there's a very close election and the market is not sure who's going to win. And so far, we've been seeing that volatility tick up recently. We've been seeing it in the S&P 500's price action. First, it was Japanese yen carry trade panic. Then it was never mind, it was false alarm. Then we sold off because of Nvidia's earnings, and now we're bouncing again. So we're seeing that volatility we expected in the S&P 500, and it's also carrying over to Bitcoin. And the best way I have found to manage emotions during these periods is to just not do anything, sit on my existing spot holdings, and just wait for the dust to settle and focus on my long-term thesis and the reason why I hold Bitcoin to begin with. So we'll see what happens. I don't know if we're going to break out immediately or if it is going to take longer, but when we zoom out and look 6 to 9 months forward, I'm incredibly bullish as the Fed enters this easing cycle and all of this debt that's been issued by the national government gets monetized. Who knows how low Bitcoin could go? We already hit my target that I wanted to see for a minimum pullback, but I'm still open to the 40,000s being retested again, maybe because of something crazy happening with the election before we finally break out higher. And I would love that opportunity to buy Bitcoin in the undervalued region, because I do think Bitcoin will do amazing in the long term, because currency devaluation by central banks isn't going away anytime soon. Regardless, I think this is a reaccumulation phase for Bitcoin before we rally higher. And I remain bullish Bitcoin in the long term, just like I remain bullish the S&P 500 in the long term. And of course, all eyes will be on that meeting that we have for the FOMC on Wednesday and seeing that interest rate decision. But more importantly, finding out if the Fed is going to go back to quantitative easing and back to increasing their balance sheet and increasing the money supply, or if they're going to keep their balance sheet flat for a while and not go back to easing. So we'll definitely monitor that as we go forward. And I'll definitely start covering liquidity more on this channel now that we're getting close to liquidity increasing as we embark on this Fed easing cycle and this debt that's been issued has to get monetized. But anyway, let me know what you expect. Are you one of those investors that's really concerned about recession fears, even though we have a decent labor market, low inflation, and positive growth thanks to all of the debt issuance? Or are you someone that thinks liquidity is going to go up and are bullish risk assets over the next 3 to 6 months? We'll definitely cover all of it as it progresses. And I can't wait for all of this election uncertainty and bad seasonality to be behind us so we can really look forward and focus on Bitcoin's main narrative as a fiat currency debasement hedge and liquidity sponge. But anyway, as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.